all interestingly poised as we start another day. The index yesterday was up about 4% or so. Let's put some of these points to Amit Dixit, analyst at ICICI Securities. He's joining us right now. Amit, great to have you with us here. Good morning. Thanks very much for your time. I was, of course, we discussed the news yesterday and just the price action from yesterday's session. But what is your sense? Is there more to go? And to your mind, is China the big dominating driver?
Yeah, hi. Good morning, Prashant. Yeah, of course, wherever commodities are concerned, particularly steel, aluminium, China is the main driver and still continues to remain the main driver with 50% production and 50% consumption. Now, coming to the chart movement or the stock price movement itself. Well, if you look at the metals pack, over last 1 month, practically we hadn't done anything. And as far as China reopening is concerned, we have to wait against the COVID infections as well. So while the policy to ease the COVID restrictions and finally reopening is welcome, but at the same time, one has to see it with the prism of the rising infections that might actually pour cold water on the nascent rally. I would like to draw parallels between this stock price movement with December 20, when we exactly saw the similar price movement. By the way, if you look at the global steel prices per se, they have moved up by around 15 to 20% in last 1 month, largely because of iron ore prices moving up. Iron ore prices back to 115, 118 from $90, while coking coal prices have remained robust. Stable, I would say, at around 270. Now, because of global prices moving up, we would have seen the same rub-off in the Indian steel stocks as well, and particularly when the consumption growth is not all too bad, and the fourth quarter we would see good growth. Traditionally, it has been seasonally a good quarter. So, everything bodes well, except for there is one joker in the pack, which is the China's restrictions coming back because of rising COVID infections. That is the only risk that I see, and a significant risk on top of that.
Amit, we'll just come to you in a bit because it's 9:10 and we just want to get some trading calls out of the way. The Nifty has adjusted to a cut of around 50 odd points, so nothing alarming. The Sensex is down about 115 points. Sudarshan, what's the big call at 9:10?
Well, the Nifty is an avoid for the day. ONGC is a buy with a stop under 142. ONGC.
ONGC, Mitesh, how about you?
I will go with the buy on Jindal Steel. Keep a stop below 564. Look for targets around 600.
Okay, thanks a lot for that. So that's on JSPL, right? A buy over there. But Amit is still with us. Amit, take us through individual stocks then. Metal prices are, of course, at 6-month highs, but do you see a commensurate move in the stocks as well? And what is the recommendation on names like, say, Tata Steel, JSPL?
No, so if you look at, I would be discerning over here because rebar prices or longs prices have behaved particularly well in India due to rise in pellet prices after the export duty was removed. And therefore, we have a bias towards long steel players, primarily JSPL and Shyam Metallics. These stocks should do better. As far as the Tata Steel is concerned, well, you will have to keep a very close eye on how European annual contracts are renegotiated. Earlier, when they were renegotiated in the backdrop of HRC, European HRC being at 1100, and now European HRC is at 680 odd. So one has to keep an eye on that. And spreads, well, I would repeat, they are not exactly very, they are, if you compare with them with 8 years average, they are around that level. So not something very earth-shattering. So not very optimistic on the whole pack as such, but yeah, if as far as individual stocks are concerned, Jindal Steel and Power is our topic in the ferrous space. In smaller space, yeah, Shyam Metallics, and in stainless, we have Jindal Stainless as our key pick.
Amit, quickly before we let you go, there was also an opinion that came in yesterday that if China were to open and there would be higher demand, there'll obviously be higher supply as well coming in from China because their production would open as well. So those could be negating factors. Your thoughts on that? And secondly, what is the difference between prices internationally and in India?
I think you mean steel prices. So
Yeah.
steel prices, currently landed cost is like almost, it's at 5% discount, which is not too bad, by the way. So we would see imports abating, and that's a very positive thing. But one has to always remember in terms of Indian steel prices that this export duty threat will always remain. If prices go above a certain threshold, government might just think of reimposing it. So because it has been done in the past. Now coming to the China factor, well, of course, the with the consumption going up, production will also go up. And by the way, in case of aluminium, what we have seen recently that because of power curves, the production has been low. But that has also been negated by the fact that downstream consumption is also low because it's a seasonally low period. In China, interestingly, what happens before Chinese New Year, there is a lot of stockpiling of both iron ore as well as alumina. So therefore, this also supports prices to a certain extent. However, if I look at inventory of steel, well, inventory has definitely risen over last 1 week, and that is not really very, very positive.
Okay, thanks a lot, Amit, for joining in. Chalet Hotels is another stock on our radar. You're watching that, Mangalam?
Yes, hotels usually we watch towards the end of the year, and this one as an initiating coverage coming in from Prabhudas Leeladhar. They have a target price of 455 rupees per share. They say that this is the best place to ride the industry upcycle, primarily because they have strategically located metro-centric hotel portfolio with marquee global brands, etc. as well. They have Westin, they have JW Marriott, etc. And they believe that the revenue would grow at a compounding rate of 19%, while the profits will compound at a 68% growth between FY23 and FY25. So that explains why the stock is up 4% in pre-open.
All right, we have the opening rates coming through in just less than a minute from now. So do keep an eye out, less than a second rather. That's the first tick on the index. It is down.